Renting or buying an apartment or a house or build a new one. What is the best option? How do you know what the best option is for you? And which traps should you definitely avoid? Until a few years ago, I would always rent. And then one day my partner and I decided, okay, let's just buy something. It was a gut feeling. We were underprepared, but we were very lucky with our purchase. Maybe you are also thinking, like, should I buy something? Did I make the right choice when I bought something? Should I just keep renting? Full transparency, I'm still not very knowledgeable about real estate, but I know someone who is, and that is my old study pal, Tim Leysen. He's a real estate expert and also is a lecturer on the topic at a university in Belgium. I got into a call with him and it was a really great call. It took around 40 minutes. We went through a bunch of questions that I had. These 40 minutes have been divided into 2 parts. So this is part 1, where we talk about real estate for private use. And then there's also part 2, where we talk about real estate as an investment asset. I hope you enjoy our conversation. All right. Tim, thank you so much for making it to this chat with me. So a little bit of history. We've known each other for quite a few years. We were study mates also, and then basically professional life took us in different directions. And here we are again, quite a few years later. Who are you these days?
Okay, well, thank you, Thierry. Thank you for the invitation and congratulations on the new podcast. And thank you for inviting me. So, my name is Tim Leysen. I think I would label myself as a real estate fanatic. I've been active in the financial sector for about 10 years, largely with a focus on real estate. I've also worked a couple of years as a real estate investor, and I teach a couple of real estate courses at a university in Belgium.
All right. So how did you get that angle to focus on real estate?
Well, largely because of my professional career, but I think real estate is a large part of our daily lives, yet people hardly ever take the time to look at the real mechanics behind the real estate economy, as is often also the case with finance and investment, and the reason why you're making this podcast. But once I dived into the mechanics, it really got me, and until now, it hasn't let me go.
Okay. So when we talk about real estate, what actually falls under the term of real estate?
Well, real estate has a really broad definition. For me, it's real tangible property. It can go from land to buildings to anything attached to it. In general, it can be divided into the sectors residential real estate, commercial real estate, industrial real estate, land, or special use real estate.
So when we focus more on real estate for private use, what should you actually consider before you even start thinking to buy a house for yourself?
Well, the first question you have to ask yourself is whether you want to buy a house or do you want to continue renting. If you want to buy a house, obviously, as for most things in the world, I think the most important thing you need is cash. Uh, Maybe not for the entire amount, but often 10 or 20% of the purchase amount is required for you to be able to finance the rest of your purchase with a bank. Another condition often set is a stable income, which would allow you to meet the reimbursement obligations at the bank. But I think it's a personal choice. It's a logical thing. One needs stable income to do the reimbursement, and one needs cash. That depends a little bit on the country. Each country has different kinds of regulation, but the standard would be at least between 10 and 20%.
Suppose you decide, okay, buying a house is something you would really like to do. How should your financial situation really look like? I mean, it's still a big decision, so.
It's still a big decision. I think the most important thing is that you have a stable income, that you have a job certainty is always difficult to find, but at least that you know for the next couple of years you're certain to have a certain income, so you don't get any problems with the bank and you can do the reimbursement of the loan. And additionally, you need to save for a couple of months in order to do your own equity contribution. In the past, what we used to see is that the third generation actually got money from the grandparents, which they then used to buy a property. Today, that's a lot more difficult. Our grandparents are living a lot longer. They keep the money, they need to keep the money for themselves. If they ever need to go to a retirement home, costs are fairly high. So we see that that generational giving is actually taking place a lot later, which means that it becomes more and more difficult for young people to purchase a house simply because they need to save for a couple of years. And between your 20s and 30s, we all know how difficult that is.
Yeah, and it kind of begs the question, right? Is it actually worth buying your own house for private use beyond these psychological factors?
Yeah, I think it's a personal choice. It's not an easy one to make. If you look at it from an economic point of view, there's room for debate. Some research indicates that renting is better, others shows buying is better. If I can quickly explain, some people consider rent to be a lost capital. But often, if you buy a house or you buy an apartment, you'll see that the total cost of ownership, meaning the reimbursement, the interest rates, the maintenance costs, the tax, is often a lot higher than the rent you're paying. And these research, they indicate that the idea is that the difference in rent and reimbursement, plus the maintenance costs, taxes, etc., can be invested in the stock market. So let's assume you pay 1,000 euros in rent on a monthly basis, but your monthly estimated total cost of ownership is 1,500. So that's your reimbursement, your interest reimbursement, your maintenance cost, your tax, etc. The difference between 1,500 and 1,000 is 500 euros. The idea would be that on a monthly basis, you invest that 500 euros into the stock market. And then the research shows different results. Sometimes it shows that buying is better than renting. Sometimes it shows that renting is buying. Renting is better than buying. Sometimes it's buying is better than renting. But often it simply depends on the time frame you take into account. If your time frame in the end takes into account a stock market that corrects or that recently corrected, well, then often the value of your sales went down. If you compare this with a booming stock market, then you'll see that the one purchasing has done a better deal than the one investing. If you look at the stock market and it has been stable, but stocks have gone up through the time frame, well, then it might well be possible that renting is better than buying. So from an economic point of view, it's very difficult, but other arguments are also important. So that's why I'm saying it's actually a personal choice, because when you buy a house, you also give up certain level of flexibility. What if you change jobs and you need to relocate? When you're renting, it's fairly easy. When you have house, it's a little bit more difficult. There's also a certain level of ease. Some people say, well, all those maintenance costs, I don't want to do that. I don't want to have the headache. I prefer renting. So besides the economic point, there's also other factors that should be taken into account. So to close the loop, for me, it's a personal choice.
And I mean, right now we're talking about houses indiscriminately, but of course, you've got houses like villas, and you have apartments. Do you see any difference there in the choice that people have to make?
A difference, yes. Houses usually are a little bit more expensive to buy than apartments. But what we did see during the COVID-19 crisis or after the COVID-19 crisis, that houses with garden, with access to greenery, often enjoy a lot of demand. The same goes for apartments that have terraces or that have a combined shared garden or something. That access to the outdoors has become very important after the COVID-19 crisis. So that's something that we see. So if you go for an apartment without that access, those prices are a little bit different. But in general, we can state that houses are more expensive than apartments.
And do you see any other practical considerations that people should take into account when choosing whether to buy a house or an apartment?
Well, a house you buy independently. It's your house. You can decide what to do with it. The same goes for your apartment, but the apartment is situated in a larger building, meaning that you cannot always do what you want. You're stuck in between a certain form of co-ownership, which is not always easy. Co-ownership means that you need to share the capex, so everything that is renovation on the front side of your house, of your apartment block, your roof, etc. Everything which is common needs to be shared. And some owners say, well, I don't want to invest in that. Some owners might already be older and say, well, that's for the one inheriting or the one when I sell it. They don't want to do the investments. Sometimes there are also owners that don't have the economic means to do those investments. So that's something that does impact the total value of your building because the attractiveness of your building is quite important. You might have a very fancy apartment within the building, but if you enter the hallway of the building and it's not really attractive, that does impact the value of your apartment.
A lot of people in middle class that are, that have enough means, sometimes start wondering, okay, suppose I want to buy a house. Should I just start from scratch and build a new one or buy an existing one? What are your thoughts there?
Again, that's a personal choice. When you buy an existing one, it's easier. You don't have any worries. It's already there. If you build one, well, you do have to do the entire follow-up unless you get an architect who does the follow-up. But again, those are extra costs. Uh, if your question relates to is one more expensive or more popular than the other one, in terms of expensiveness, I would say new houses are often a little bit more expensive than existing ones, but these markets are correlated. I mean, when the demand for newly constructed houses go up, so does the price, obviously depending on the offer. So newly built houses coming onto the market. But in general, when the price difference between both becomes too big, and with price difference, I mean newly built building, older building plus renovation costs. If that difference becomes too large, then you will see that the market will automatically shift itself. So just to indicate that these markets are correlated. Today, after COVID and with the Ukrainian crisis, we see that high inflation costs, so high labor costs, high material costs, not everything coming from China, harbor often blocked, etc., makes that price in materials, labor costs have been going up, and that makes building obviously a little bit more expensive. These costs you also have when you do a renovation, but obviously the renovation is only a small part of the cost compared to a newly built building. And with the renovation, well, you never know which surprise lurks around the corner, huh? You buy a house, but you see what you get, but you never know what's really behind the walls.
Any specific scenarios or stories that you could share around that? Something that you've witnessed and that really drove
Well,
home the points for you?
nothing spectacular, but people are not experts. People do their jobs, they have their own lives. They don't always have expertise in finance and in real estate, which is impossible. But if you visit a house or apartment, take somebody along to do the analysis for you. I've heard stories and I've seen situations where people buy a house and then suddenly are confronted with the fact that, well, the roof stability isn't all that. Electricity needs to be completely changed. And, well, if you haven't taken into account these additional costs, yeah, that's not such a nice surprise to have.
So, suppose you got yourself a house. Which traps do people often get into? Which one should you avoid?
Yeah, well, let's take a step back. And when you find a house and you want to do a bid on the house, my first point would be try to rationalize your emotional drift. The fear of missing out often drives a buyer to miss out. And what I mean by that is people they've seen a house and they say, wow, it's ideally located, it's close to my grandma, I don't have to do a lot of works, it has the 3 bedrooms, it ticks all the boxes. And then you see that it's being sold for, let's say, 400K, and you feel like, oh, I don't want to bid 330 or 340 because, well, somebody else might get just in front of me. Brokers, when they do the visits of the house, they will, for instance, they do the visits very closely upon one each other so that the one leaving will see the next one coming. It's really the psychological trap to show you there is a lot of interest in this house. Be fast, bid high. But I mean, think about it. Leave your emotion to the side and think about it in a rational way and try to bid low. I mean, the one selling the house, if he's interested, he will give a counter. If he has a lot of interest in the house and he has another bid, he will tell you. He will say, okay, I'm not interested in that. I have a bid of minimum, etc. But take into account the one time out of five that it would work, those extra 10K or those extra 15K that you bid lower, that's 10 or 15K directly into your pocket. That's for that special surprise that might lurk just around the corner.
Yeah, before that, you also mentioned something about bringing someone along who can evaluate the property. So I can imagine that can also come in handy when you buy a house that's already a little bit older. Anything um, that you have around that? Are there certain traps there that you should also avoid?
No, I don't. I'm not sure you want to take somebody to value the house. I think you want to take somebody who's active in the construction sector, who can actually see, okay, the stability, which is the most important thing. The stability of the house is perfect. There's no humidity, things like that. Electricity looks good. Take somebody from the construction sector, an all-rounder, simply to say, okay, the windows, they're fine, the electricity is fine, stability is fine. These are the works that need to be done. These are the renovations that could add value, and this is an indication of the cost. Then you can make your choice of your bidding, taking into account the costs that still need to be put aside for the renovation works in the house. And once you've bought it, I think the important thing is people often say, okay, I'm doing improvements to the house that would add value to that house. But I just want to point out that not every investment adds an increase in value of your property. If I take an example, if you put a luxury kitchen in a standard apartment building, it might suit you just fine and it might be beautiful, but the next buyer is probably not willing to pay extra for this cost. People often think, oh, I've bought a house of 400K and I have done renovation works for about 100K. So if I sell it on the market, it goes for 500K. That's not true. There is a reality on the market saying that if a house which is practically identical to yours, let's say 1, 2 kilometers from your house, if that goes for 450, that's fine that you've invested in 100K, but the reality of the market is that that house goes for 450 and not 500.
How do you then get actually most out of your purchase?
Try to buy something below the market price. That would mean keeping your emotions at bay and simply trying rationally to get most out of the deal. Secondly, if you buy something within your means. So you're not stretched under a payment to the bank in the upcoming years. You can still live your life. You can still do a small investment each month in stocks or in bonds or in anything or in your leisure, whatever is important to you. Make sure you have that buffer. Having a house could be very important to you, but it's something that you will be reimbursing for 15, 20, 25 years, while your salary will be probably following inflation, indexation. Still keep that kind of buffer so you still have the flexibility in your life to do what you want, and your house does not become a kind of prison. And if you say, okay, I really want to buy a house, but it's probably not the house for the rest of my life. It's possible, say, if you have the possibility to buy at a very young age, you still don't have any children, you might say, okay, this is good for 10, 15 years, but once I have children, I want to sell the house. I want to go for a 2-bedroom, 3-bedroom flat or another house. If that's the case, take into consideration the liquidity of your product. Huh? How fast can you sell it if need be? And is the buyer's market today large enough for this property on this location? Let's say I give always the example of a house which is kind of isolated. Okay, fine for you, but if you want to sell a 3, 4 bedroom house fairly quickly, which is isolated, well, your target is not the family with young children because they don't want to go left and right to transport their kids through their leisure activities to school, etc. So your market, your seller's market might be fairly limited. If you buy a house in a bad neighborhood, you also take into account that your buyer's market is very limited. So that's what I mean with the liquidity of your product.
All right, great. So far, I mean, this is already like great information for when it comes to real estate for private use. Let's also look further and look at it as an investor. So, ending on that cliffhanger, that brings us to the end of part 1 of my conversation with Tim. And if you'd like to have also the second part of the conversation where we look at the real estate as an investment asset, I recommend that you check out this video. Thank you so much, and catch you in the next one. Cheers.